Hi, Anthony. I see you in the house. Thank you so much for taking the time to join us here in our community. I'm going to pass you the controls so that we could hear your voice and see your screen. You'll see a drop-down menu there, buddy. And let me check your mic.
He's calling.
Can you hear me now?
I can hear you, Anthony. How are you?
All right, great. I'm doing well. Thank you very much, Dale. Thanks for having me.
Oh, it's great to have you, Grizz. I follow you on CNBC for years. You always give real nice technical levels. Did you bring any charts to show today?
I do have charts. I'm pulling them up right now as we speak. So,
okay.
I'll be ready in 1 minute here.
Okay, Grizz. So I like to go back in time machines with people. I mean, it's a long and winding road to where people are at now. I know you're a member. I'm not sure what exchange. I'm guessing
it's the NYMEX.
Okay, I was going to guess NYMEX. Do guys still go down there to trade? Because I was in Chicago a few years ago, and the only pits that seemed to be populated were the options pit. Is it the same on NYMEX?
It's completely done now, Dale. All of the products that were traded on NYMEX have migrated to the screen.
Okay.
Yeah, it's pretty sad. But what we do have is we call it the Annex, and it's a room where about 60 or 70 traders decided to take up space. And these aren't only oil traders. There's a lot of gold traders here. The COMEX guys are here too.
Okay.
And,
yeah. So people didn't want to stay home. They wanted to have some peace and get away from their families, so they rented a space near the exchange.
That's absolutely it, and peace is correct, because you know how it is. You need complete focus when you trade this.
Okay, so before you got involved in commodities, was that your first entree? As you became an adult and decided on a career, did you know right away from being a young guy, maybe in college, that you wanted to be a trader, or is it?
I didn't know I wanted to be a trader until the first day I came to the trading floor, and it's a funny story. But my brother was down here already, and I was in college. And I was just finishing up my final year, and I visited my brother on the floor, and he said, "What are you going to do?" And I said, "How about you get me a job down here?" And it started from there, and that was, Dale, it was September of '84 that I started.
Okay.
And so here I am, too many years to count later, almost.
Yeah, I'm still waiting to see your screen. So I had
this. How do I put that screen up?
All right. So when you go to the screen share, it'll pop up and show you.
I see a. Okay, here we go.
Yeah. So I had a similar experience. I had already graduated, and a buddy of mine was a member at the CME in Chicago, and I went up to the gallery and saw Belly's Go Fast Market, and that was it. I had no idea when I was in college that I was going to do this, even though I was going to college in the middle of the cornfields in DeKalb, Illinois. But when I saw, the action on the floor, I was hooked right away, and the rest is history. 80 years. This was 80 years ago. No, I'm kidding. Yeah, today it feels like 80 years ago. But so you had a similar, kind of a similar experience. So you're a lifer. You didn't do anything.
Absolutely.
You didn't do anything before this.
No, I didn't do anything.
Me either.
So you doing anything after this?
Yeah, let me ask you this: did you ever try and step away from it, Anthony, and say, I just need to recharge my battery or try and do something else? Because I did a couple of times, but I found myself, no matter what else I was doing, still with an eye on the market and following what was going on. I finally decided it was like being in the mafia or Hotel California.
Right.
You can't leave.
Yeah, once you're in, you can't get out. I've never done that. I've only taken breaks, 2 weeks, 3 weeks, a month. I keep a lot of hobbies like scuba dive and stuff like that. That kind of clears the head. You know.
I like what you do for veterans. I noticed on the website that you
Oh yeah,
you help.
that's
Yeah,
another thing too.
yeah. So you know, you believe in sowing good seeds and helping guys that had more courage than I did to you know, lay it all out on the line and face enemy fire. So congratulations and great work that you're doing for the veterans. So
Well, thank you. I appreciate that. You know, Dale, we started that organization about 6-7 years ago, and it took us 18 months to build one house. And right now we're doing about 10 or 15 a year houses, and we've done over 150 at this point. So.
wow. That's great work, Anthony. So why don't we get back to fear and greed now? And
yeah, can you see my screen?
Yeah, yeah, I'm looking at the crude right here, and I see the green candle pushing up towards 70. So we've had two kind of significant tops and corrections. As I look at your chart, I certainly would not want to be short. It almost looks like, you know, I look at 3 drive patterns, and to me, this has 2, so it looks incomplete. Tell us what your view is on crude, and do you consider yourself more of a technical, fundamental trader, or are both important to you?
I like to think that I can meld both of those things to make a decision on how to trade. Because if I looked at, you know, right, if I looked at the technicals now, you know, I'd be long this market. I am actually looking at it from the long side. But really, it's the fundamentals that kind of have pushed it to that. And the reason why I say that is because, you know, technically this time of the year, Dale, we're past the peak summer demand season. And
the
really,
driving
you know,
season.
Exactly. And every barrel of crude oil, half of it is refined into gasoline. So once that demand starts dropping, the demand for crude starts dropping. And we would be down, you know, if you look a few days ago, you can see my pointer, I guess. You know,
I can't.
A few sessions ago, you know, we were pushing on the precipice here of that 67.50 area.
Right.
You know, where if we break through that, then we're looking back down to $65, $63 in that area. If you look kind of back about 20 or 30 days on my chart here. But what's happening is it's the geopolitical situation.
Okay. I was going to go there.
Iran. Right.
Yeah, I was going to go there. So, you know, so do you think that the fact that the Iranians were holding naval exercises in the Strait of Hormuz put that floor in the crude down there, and now that sanctions are going to be put back on Iran, that a lot of this kind of people thought about what the repercussions would be if there were any problems in the Strait of Hormuz, and we could have a $40-50 move in crude, couldn't we?
We could, absolutely. This could go, I mean, we're talking 2 million barrels a day here. And in a situation where, you know, the overall, you know, supply imbalance that was existing for the last 4 or 5 years has gotten a lot better. There's not a lot of oil just sitting out in tankers floating around anymore.
Right.
You know, it's being used as world economies have improved. They've used a lot more. So, you know, Dale, it's the uncertainty really that's driving this of what's going to happen. You know,
do you think, you know, I've interviewed some people that, you know, were talking about even, you know, a year ago, you know, what was going to happen in Iran with the discontent of the population. And, you know, governments have a tendency that when there's civil unrest, that the best way to calm that down is to have people come together supporting the government, no matter who it is, if there's any kind of conflict. So does it look like a higher degree that something might happen there?
You know, I'll tell you, it's a tough one at this point, because what they're doing is, you know, because of the past sanctions, they've had to take a lot of the, you know, the let's call it the subsidies that the government has given the people as far as gasoline and things like that. And, you know, you just saw what happened in Haiti when they you know, proposed an increase in gasoline and stopped some of the subsidies, and you had riots in the country for 2 days. And this
and their currency has collapsed.
Absolutely, and this is where you're getting there. So you buy less. Plus, the other thing is, you know, a lot of these Middle Eastern countries, the population is young, and there's no jobs, there's no opportunity for anybody there. And this is all starting to come to a head. So I don't know if it's the days of I blindly support the government anymore, but I do know one thing, Dale, that in the midst of all civil unrest and everything else, whoever or whatever is in charge, they try to keep the oil flowing because this is really one of the only commodity that they have that they can sell. You know, big commodity, let's say, that they have that they can sell. So they'll try to keep it flowing. And my thoughts are that a lot of this oil, especially if it's, the sale is curtailed by the U.S. as far as sanctions go, a lot of this oil is going to wind up in China at a large discount. At a large discount.
They're the best. They're the best traders, aren't they? I mean, I always tell people when you read stories about China's going to be buying something, they put that out so they could distribute. And when you hear that China is selling something, they're accumulating. They're very good commodity traders. So, yeah, they're going to take advantage of, especially in the middle of the trade war. Why would China cooperate with us right now and not buy Iranian oil when we have a trade dispute going on with them?
Exactly. And you know what makes the Chinese good traders? Because they take emotion out of it. They take all the emotion out of it and everything else. So it doesn't matter to them.
I don't have any fingernails left. I'm very detached.
Right, exactly. In human rights, none of that really is a concern when you're talking money and China and trading and things like that. So, and nuclear weapons, they could care less about whether or not another country owns them or not, is my opinion.
Okay.
So I think that a lot of the oil will wind up there. Not all of it, but a lot of it. So that means that the Chinese that had contracts, with other nations will, end those and buy the oil from somewhere else. But then, oil it's not like there's, any more like millions and millions of barrels just sitting around. So,
okay.
Oil will be sold somewhere else. It'll be sold somewhere else. But as long as we have this type of uncertainty hanging over the market and the threat of, potentially hundreds of thousands or even millions of barrels being taken off, you have to, you can't ignore it. And in my opinion, you have to look at crude from the long side at this point.
Okay, and if President Trump and President Rouhani get together for, a summit, kind of like President Trump did with Kim or Putin, do you think that would relieve some of the upside pressure and that might set up a break to buy?
Absolutely it would. Absolutely it would. I think that, the breaks you might get to buy now, because that summit could be, a few months down the road. But the breaks that you get to buy now would probably be based on the supply situation here in the U.S. And I think over the next few weeks, as refiners start to enter their turnaround phase, which means, they're getting ready for the winter and the
heating oil.
Gasoline. Exactly, and the grade of gasoline that has to be refined for that. It's the less grade. So now they have to get ready for winter, so they go to turnaround, so they start using less crude, which means you start seeing supply build. That would be the relief I think you get, Wednesday, tomorrow, to later on today and tomorrow. But if you look at the chart itself, it's setting up for some actually very good support, at least a couple dollars lower in that 67.50 area. You've got that the red line on my chart is that 50-day moving average that comes in at 68.83. But if you look at the bottom of the chart, the test, it's early in the morning. The Stokes. If you look at the Stokes on the very bottom of the chart, you see where the blue crossed over the red. That's really a bullish sign right there.
Okay.
If you look at it, it's kind of at the bottom of the range. So even though we're at $69, this is nowhere near of a market that's too hot, or in fact, it's a little cool right now, if you ask me.
Okay.
So it's not a market that's showing that it's too hot or anything like that.
Do you trade, Anthony? Do you trade the products, or do you do things?
I do.
Like crack spreads and things like that.
Here we go. This is the heat crack. It's a 5 minute. Let me go to the daily here. This has been really, really strong. Heating oil itself, which is really distillate, okay, and it's really diesel. They still call it heating oil in the contract here, because that's the way all the symbols are set up. So this is really been, obviously we've been at $27 at a point, but to see a heat crack showing it. I can go back here and see, Dale, even though it's daily, you can see these
dots,
little dots, right? And this is
it looks like my EKG.
There you go. But this is cracked.
All right, so it's pretty cheap historically, is what you're saying.
Absolutely. Well, no,
okay.
I'm actually saying that this crack is historically for this time of the year is a little bit expensive, but that's due to the supply situation. And this is gasoline to heating oil. This is another one, okay, which is been negative, which is another surprising thing, that the price of heating oil is actually over the price of gasoline at this time of the year, which is
so that's unusual.
Don't see that. Yeah, absolutely. Usually, obviously, gasoline would be over, but because of heating oil, and we export a lot of diesel, so that's
all right, so
that market support.
All right. Anything in the precious metals, Anthony? Do you do anything there? I think you've been brought on for, huh?
I've been looking at gold because, I see, looking at the commitment of traders report, and let me see, I'm going to pull this up for you guys.
Oh, yeah, the COT. You're breaking up a little bit on me. Are you using a mic off your computer?
No, I'm actually using a phone. Am I doing it?
Oh, okay. Now? Okay, a little better, yeah. Okay, go ahead.
You know what? It's not a great connection, but the COT report in crude oil.
It's the most bullish it's been in years.
Absolutely.
Isn't it?
There's a lot of shorts in this market right now, and at some point they're going to start to cover. And when they do, this market is really going to go.
I kind of thought what happened Friday when it rallied $16, even though the dollar was firm, was kind of like the first tremor before the volcano erupts or there's an earthquake. It just shows how short the market is, that it could rally $16 in about 2-3 hours out of nowhere.
Out of nowhere. So I'm going to just pull that up real quick. Here we go. Let me just show this. Let's see here.
And I wanted to ask you, Grizz, is Grizz Energy your business model? When people are listening to you right now, besides trading your own account, do you advise maybe hedgers?
I have a couple of smaller clients in the Midwest, and they own a bunch of retail gas stations, truck stops, things like that.
Oh, okay.
And I advise them on it. I also send out a newsletter. I've kind of suspended it this summer because I traveled a lot earlier in the summer.
Good for you.
That's why you and I couldn't be on earlier in the summer. But I plan on starting again in the fall. And if if anybody hits me up at grz90 at AOL.com, I can give them all the information about the newsletter. The website is under construction, so I wouldn't even suggest going there. But see, here we go. If you look at this, this chart, this orange line is the number of shorts in gold.
Right.
And if you look at where this started, back.
And those are the funds, right? Those are
right.
like
these are managed money. So this is funds. Okay.
Okay.
So this is kind of what you want to look at. So if you look back at June of where this was and to where it is now, I mean, it's incredible. 153,000 shorts versus in June 49,000. So triple the amount.
And the blue is what? Retail, small specs?
The blue are actually the open interest for the longs on this.
Oh, okay.
So there's also 100,000 longs. But really what we're looking at is, that's pretty significant in itself, but it's these shorts that have climbed so much.
Okay. And the green aqua are the commercials, and they have a very small short position?
That's actually the spreading on that. If I wanted to go, okay, here we go. These are the producers right now. All right? Obviously, they're short. Here's the swap dealers. Okay, that's about even, and that is not a surprise.
So the standout is the managed money short position.
Yes, exactly. Here's right. These are other reportables. These are small ones, things like that. But the standout right now is the managed money because that's what the hedge funds are doing.
As being a commodity trader, I know, Grizz, you have to pay attention to the dollar. because the dollar is kind of the linchpin that everything spins around. And we've had a pretty good dollar rally that I think has put pressure on the gold. Any view that the dollar might be close to putting in a high?
Certainly doesn't look like it at this point, Dale.
Okay.
You know what? Let's. I believe I have a dollar index chart here too, and if not, I can just.
I thought we might make one more high just to clean out the shorts over 95.65.
Right. You look at the. Here's the dollar index chart. Now you look at this right here. It's just,
yeah.
You got a couple little tops here. 95. You know, right above 95. Here's another one. 95.
Yeah.
So I think, yeah, you get one more spike above that to clean out this stuff, and then I think we could start heading a little bit lower. But
maybe down to your green line. What is that, a 200-day?
The 200-day, yeah, right here, 92.23. That's exactly.
Okay.
The 200-day line, blue is the 21, and the red is the 50.
Well, Anthony, go ahead. No, go ahead.
At least get this down. I see this at least coming down to this, you know, at least the 50-day right here. And possibly all these bottoms right here, which are right below 94.
Okay. Anything you want to wrap it with? I think we've covered the board. You pay attention to equities. They just keep going up. They're going to continue to go up.
You know, Dale, I was thinking about that. I put out a tweet yesterday that, you know, anything that looks above, you know, where it settled, which was that 28.5 in the E-mini, I said to myself, you know what, above that, and I don't see any reason why this can't run
to new highs.
To new highs, absolutely. Because it seems like the market is really ignoring the trade wars right now. It's not showing up, obviously, in the data. The earnings have been good because of taxes alone.
Yes.
I think there's a bit of a disconnect going on between companies' performance and maybe the person on the ground, you know, the middle class guy. I don't think he's benefited as much as companies did off the tax reform, but you can't ignore that, so don't let that cloud your judgment, you know?
Right.
Right, because, you know, you might not be feeling it so much, but they are right now. And
yeah, they're feeling it with buybacks.
You know what, Dale, I agree with you 100%, but you know, two things move the equities market. It's the central bank, which is still kept, you know, interest rates are low, and earnings. And both of them have been very positive for companies. So,
well, Anthony, you know, now everyone knows that is watching us live and listens to the recording later while you're brought on CNBC to give some crystallized, huh?
Yeah, that was another one I wanted to say. You know, if you want to catch me tomorrow, I'm on, you know, I'll be on halftime report tomorrow around 12:30, between 12:30 and 1 o'clock. And not sure what we're going to talk about yet, but it'll certainly be one of the things we covered today.
All right. Well, I tell you what, it was a great presentation, and thank you for sharing your views on these different instruments, Anthony. I really enjoyed our conversation, and like it or not, you're my trading warrior brother now.
Same here, Dale. Thank you very much for having me, and anytime you want me on, just give me a ring.
Okay, Anthony Gisanti, everyone. You could follow him at Anthony Grizz, and you could get to his website. You can
go to my email, grz90@aol.com, and anybody that has any questions about trading, I'm always very happy to answer them. I'm also Anthony Grizz, G-R-I-Z, on Twitter. So you can follow me there and ask me questions through Twitter.
Okay, Anthony. Good hunting to you the rest of the summer, buddy.
Thank you very much, Dan.
And thank you for the great work you do for our guys that have laid it all out there, that have the bravery and courage to come back and need a helping hand. Thank you for doing that for our veterans. All right, buddy.
Thank you very much. All right,
thank you, Grizz.
Yep.
Adios.
Bye-bye.
Okay, that's Turnaround Tuesday, everybody. Enjoy the rest of your day. Welcome. I recommend you follow Grizz. As you can tell, the guy's got a handle on a lot of different markets, mainly commodities. So thank you for your attention today, and see everyone tomorrow. And don't just count your pips, count your blessings. Adios.